Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the 1st of July. The 1st of July, Bull versus Bear webinar. Steve Miley here on the Call for Trade Day. Welcome, everyone. It's the 1st of July. It's the second half of the year. God, where is the first half of 2024 gone? As we go into the second half of 2024. So, welcome everyone. Good morning, Jim. Say good morning if you like. If you're on the live today on the webinar, the Bull vs. Bear webinar, please do say hello. Stick your name in the chat. It'd be nice to get some hellos going. So good morning, Jim, first of all. Right, we're going to run through our usual regular run through with a slight different twist for the Monday webinar. The Monday webinar, we take a look at the shape of the week, the slightly bigger picture look. Yes, we're day trading at trade day. But why is it important? Because we look at the shape of the week. Where are the volatile points going to be in the week? Maybe the beginning of the week, the second half of the week is going to be quieter. We can maybe adjust our trading strategy if we think we're going to get busier or more volatile markets. We're going to see bigger ranges or narrower ranges. Maybe we're going to expect more impulsive trend following moves, or whether we're going to look more like mean reversion, average trading the average of the market, looking for markets to be more in range consolidation mode. So I'm going to kick off in here with our Macro Matters weekly recap and outlook. So these are published every weekend. So if you go to the panels below where you're watching the webinar right now, there's three kind of columns. The left-hand column is the technical analysis reports. We'll come to those shortly. The middle column is the fundamental reports, these weekly reports that we put out. And then the third column is the news reports. And we'll come to the news reports from our partners at the Squawk service, Live Squawk. So first of all, we're going to go through this, but rather than go through the macro matters, I'm going to zoom in and go into the weekly recap and outlook, because it's got the condensed version in here. So we'll start with the macro matters on the headlines, actually. So US stock indices held H1 2024 gains last week. So markets in here were very little changed, actually, on the week last week. It was a relatively light data, light event week. Markets did nudge higher to new intraday highs. Actually, net on the week, we were very little changed. Nasdaq had a small gain. S&P was slightly down, I think, by like a tenth on the week or something. And then S&P and the Nasdaq. So markets, the S&P and the Dow were very little changed on the week. The main data point, excuse me, I need to clear my throat. The main data point on the week was the PCE data that we got on Friday. Actually, cooling was lower than expectations. If I go and to the daily calendar and actually go back to, is this going to screw everything up? Let me just duplicate this. So I've got that there, but let me go to last week's data, and we'll go to Friday's data. So here we go for the PCE data. Where are we? PCE data. So pretty much in line with expectations in here, but moving in the right direction. Okay, so cooling lower. So not out of line, in line with the expectations, but cooling. So a slight positive on that PCE data from back on Friday. What else do we have in here? Biden falters in the presidential election debate. Still debates going on about the debate. What do I mean by that? Well, will Biden stand down? It seems like the latest news is that the only people who are going to get him to step down are his family, and his family at Camp David over the weekend put their confidence in Biden. So it looks like Biden's going to continue to stand. So that potentially means heightens the possibility of the Democrats losing the presidency and Trump returning to the White House. So we'll see how that pans out going forward. Obviously, that could have a notable impact on markets if we get any further clarity. Japanese yen not really impacting us, but it did boost the Nikkei. The Nikkei doing well last week as the Japanese yen continued to weaken, not just against the dollar, across major currencies. So weakness in the yen is positive for the Japanese stock market and various Japanese exporting stocks particularly. So we've seen the Japanese yen weakening, boosting the Nikkei, which can have a knock-on effect and boost Asian and then maybe global stocks, but only a kind of a minor impact there coming from that into the US stock indices. And then looking ahead, it's a big week. a big holiday shortened week. This obviously we have the Independence Day holiday. We're sending an email, may have gone already out in here about with the usual link to the CME. I know the cash market closes early on Wednesday and is closed all of Thursday. I'm going to come back to you guys and double check. We'll see where the futures are landing in that. I think we got early closes on both Wednesday and Thursday, but we'll revert with the email, and we'll talk about that as we get closer to the fact in here. But I think it's early close on Wednesday, partial close as well on Thursday as well. So we'll certainly be watching out for that. But what are the big points of the week? If we go down to the actual calendar in here. So we've already had some of it today. Global PMI data we've already got coming through from S&P Global. We get the US PMI data, manufacturing. These are both manufacturing coming through today. German CPI, that's an important data point. Tomorrow's fairly light. RBA meeting minutes as Reserve Bank of Australia, and then the EU CPI data. And then on Wednesday, in a partial day, so it's an early close day on Wednesday, we get the service sector and compositive global data, the US ISM services PMI, and then the ADP employment data, and also the US FOMC minutes in here. So, and I'm not 100% sure whether the market's going to be open for the Fed minutes. Again, we'll revert to that as we get closer to. We'll be zooming in on that. US Independence Day holiday, obviously, on Thursday. It's also a UK general election. We have a general election here on Thursday as well, with the US closed. That is not right. That shouldn't be in there. That should have been removed. It's not the ECB meeting this week. And then on Friday, we get the EU retail sales, but then all focused then on Friday, back from the Independence Day holiday, on the US employment report. So a really busy week in here. Manufacturing PMI data today. And then composite and service sector PMI data from global and US, and the ADP data and the FOMC minutes on a holiday shortened day on Wednesday, Independence Day and the UK election on Thursday, and then the US jobs report on Friday. So super busy going into this week, and that's all kind of more summarized here in the weekly recap and outlook. Let's go to 5 things to start your day. The other thing that's not included in there, because that was written over the weekend, and we didn't get the French election results until later on Friday, but the France's centrists and the left-wing parties are racing to stop the men of the country's far right following the first round of the legislative elections. So it didn't. Yes, the far right won. Okay, it looks like that was kind of as expected, but it looks like we could get some paralysis in here in France, which is probably not as bad as the market would have expected. And so, if we get paralysis, the markets like paralysis, right? On the political paralysis, markets like, because if nothing changes, then markets can just get on and do what they need to do. Okay, so the French stock market's actually rallied on this, which is like kind of a little bit would have been slightly unexpected. So. Speculation was over candidacy of the US presidential vote later this year. So that's later this year, remember, for the presidential vote, whether after the far-right national rally led by Marine Le Pen and emphatic victory in the first round of the legislative. So the executive and legislative are on different ballots, okay? So it's different to in the US, different to in the UK. This is just for the legislative. So this is like the Congress and Senate elections. They're separate from the executive, which is for the president, okay? So just to make that clear. Polls suggest that absolute majority is not the most likely outcome. And so we have a multi-party system in France. So not like the first past the post, two-party systems that we have in the UK and in the US. It's a multi-party system. And then the split of the vote across those multi-parties means that the right-wing coalition is unlikely to get an outright majority. And so we're going into a second week, second round of votes going into next week. So there's a slight sigh of relief on that more than anything else from the markets. And so the French stocks are rallied and pulled European stocks up with them. Boeing buying Spirit Aero, not really impacting us. BlackRock chases private assets, not interesting to us. This is interesting. I've got a talking about potential going over to 24-hour markets in here. with the likes of Robinhood and Interactive Brokers offering you can buy and sell stocks 24 hours a day, right? Even though the actual stock market's not open, we are looking at potentially the stock market moving that way. I'll share an article with you as we go forward on that. Biden campaign pushes back to this is what I mentioned earlier on, that the family and aides dismissing suggestions that Biden's going to step down and won't run for president. So we'll see how that one pans out, shall we? And a lot of this covered as well in the news reports in here. This was the US briefing. Remember, this goes out on a Sunday from Live Squawk. So talking about, well, this is before we had the Eurozone inflation, but focusing on Biden loyalists dismiss calls to quit, and then the focus on the French election in here. And this morning's European France's far right makes huge gains, but again, not like to get an outright majority. The PMI data, Chinese manufacturing remains flat. That's disappointing data this morning. We'll look at that as we go forward. So yeah, looking at the data today, more specifically in here, we've had this global PMI data. You can see the Eurozone data. So the China data was slightly disappointing. The Eurozone data in here, better than expected on the most part, apart from the UK. So the French, German, and Eurozone data as a whole better than expected. The UK data slightly worse than expected. And now looking into this afternoon, remember before we get the S&P global data first of all, but the more watched number is the ISM data from the US. So the S&P global data at 9:45 Eastern, 10 o'clock Eastern is the ISM data. That's the one we're going to be watching going into this afternoon. Ahead of that, in just under 30 minutes, we get the German CPI data, but we have already had in here the state data. So we get 5 German states reported. That's already out, and that data is pointing to the national number for Germany as a whole. So preliminary data for the 5 German states indicating that the national number could move lower. So, but we'll be watching out for that official report in here from German CPI. And remember, that is important, seeing how we're not just looking at. It's important to watch US data and the US inflation, and that's obviously what the Fed are watching. But as global data come down, remember it's a global economy. It's global. If we're seeing signs of global inflation slowing, then that's a positive as well, potentially on the global front, and then for the US as well. What else do I have for you? So global factory activity is mixed performance in June. So this is the PMI's data. As we said, the Chinese data in here slightly worse than expected. European data slightly better than expected in here today. Oh, this is something I just wanted to throw in. Just a little bit out of place in here, but so we are into, as I said, right at the top of the webinar. Today is the first day of the second half of the year. Okay, 6 months are done, 6 months to go. It means we're going into the earnings season coming up. Now, nothing at the moment. We have to move it a couple of weeks. If I go into this week's data in here, nothing really. If I go into next week, you can see next Friday is when it all kicks off. So not this Friday, okay. So just under 2 weeks' time, we kick off usually with the. So we do get some stuff on the Thursday, but really we kick off in earnest with the financials: J.P. Morgan, Wells Fargo, Citigroup, Bank of New York Mellon. We're getting all of those next Friday, July the 12th. So we'll be counting down to that, watching that in just under 2 weeks' time. Basically 9/10 trading days. Given we've got the holiday as well in the US. Away, we are going to start getting the reports for the earnings calendar for the Q2 earnings reports as we go into Q3. So that's on the horizon as well coming up. Euro up as traders past the French election. Markets gain on bets Le Pen party to miss absolute majority. So a bit of a sigh of relief for that. Goldman strategists flag higher bar for US earnings. So we've got US earnings flagged there. Fed's rate cut delay won't hold back on the tide of global easing. So obviously we've seen other central banks already easing, even though the Fed have yet to join the party. Almost all major central banks are now on a path to rate cuts. So the major central banks already moving along that path already. Second half of 24 kicks off. Markets bet on French gridlock, so that's a positive, as I said. Futures inch up this morning. European exchanges up, with France also taking US futures this morning slightly higher. And we can see in here a little change on the despite that Chinese data in here this morning being slightly worse than expected. The Hang Seng little change this morning with the Nikkei just slightly higher, but Eurozone in here The French market up 1.5% on a sigh of relief that maybe the right wing of the of French politics won't get an overall majority. So rebounding, having sold off significantly of late in here. The CAC up 1.5%. The German DAX pulled higher as well, 0.4 higher. And with that better than expected PMI data as well that we said that we had from Germany and the Eurozone and from France, and the FTSE up as well, despite the fact that PMI data from the UK was slightly worse. And if we look at the CAC in here, hopefully it's... oh, no, it's not going to give us it on. I think it only gives... Can I switch this one to the... Oh yeah, here we go. So there's the big sell-off we've seen in here since the election was called, but we've had a bit of a rebound. It's a long way to go. I mean, there's been a significant sell-off in the CAC. If we go to the US indices in here on the overnight, slightly up with the European indices higher in here this morning. So the Nasdaq and the S&P are about 0.2 higher going into this morning. And then I want to just focus on this because they mentioned about the US Treasury market. Wall Street week ahead. Inflation data may break the US Wall Street jobs. Inflation data may break the US Treasury market out of narrow range in here. So this was back from Friday actually, but if we look in here, we had that on Friday. We did get that sprint higher in yields. This is, remember, a yield chart on the bonds, US 10-year Treasury yields. So we've broken out this more narrower range that we were in. Okay, we were already trying to break out of that earlier last week. A break out of that on Friday to the top side. I think it really needs to clear above here now. So you got up at 448 in yield, and that's going to be a key level. And if we look at the 10-year note in here. On here, we have seen the breakdown in here, and that breakdown in price, lower prices, does point us lower actually. So the risk now for lower prices. This may put a little bit of a cap if we're going to lower prices, higher yields. It may put a little bit of cap on the indices, but the moment the indices hanging in relatively well. Yes, we did fade a bit lower in here back at the end of last week for both the Nasdaq and the S&P, but underlying bullish pressures from my perspective stay very much intact. Here's that article. I promise I'm going to share it in the chat now. I don't know if it's available for everyone. I've got a subscription, but 24-hour stock trading is booming and Wall Street is rattled. So what might we go over to 24-hour markets on the actual official markets as well? We'll have to wait and see. All right, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. Take care, stay safe. Lots coming up today and this week. We'll firm up the timings on the Independence Day holidays. We go into the week. Watch out for the emails. And I'll be back with you tomorrow for another Bull versus Bear webinar on Tuesday.